Good day, guys. Sickle there. Today we're breaking down fair value gap. So before we dive into it, shout out to ICT, the ghost in the machine. Thank you for all you have been doing in this forex industry. I say shout out. Sickle is saying thanks for all your doings. So what is fair value gap? We're talking about FVG, also known as fair value gap, also known as an imbalance, also known as inefficient price action IPA, and also known as gap. Whatever you know it as. Fair value gap is the spaces between three candles. It indicates a surge in price. When there is a surge in price, the wicks does not cluster together. The spaces between it is called an imbalance. It creates an imbalance when there is a surge in price. So whenever there is a fair value gap in a market, it indicates volume. It indicates volume, right? And you want to be trading on a market that has volume. Whatever you are trading, you want to be trading on a market that has volume. You want to be trading on a market that has volume. So fair value gap is that volume. So what are the importance of a fair value gap? Fair value gap shows imbalance in delivery. Fair value gap shows imbalance in delivery. Market likes inefficiency. Market like inefficiency. When there is imbalance, price often come back to refill it. Price often come back to rebalance it. As a matter of fact, price is actually rebalancing an imbalance or is drawing to a liquidity. So FVG acts as drawn liquidity. It can be used as entry opportunities. When there is an expansion upward, price always retrace to an FVG and you can take an entry from there. Then number 3 importance is it confirms institutional activities. So like I said, FVG indicates volume and you want to be trading where a market where there is volume, even if you are trading support and resistance, SMC, CRT, whichever concept you are trading, you want to be trading where there is volume. Like if you have a trend line break that left a fair value gap, the retest is like have 100% high probability chances of holding than a trend that was broken without a volume, without a fair value gap that indicates a volume. Act as confluence with market structure. So for example now, order block, once there is fair value gap, that increases the chances of an order block holding, or another block that forms out of a fair value gap has the chances of holding, is a strong kind of order block. Then fair value gap can be used as target because market will always like to go and fill it up. So even if you don't take entry from a fair value gap can still act as your target. You can still target a fair value gap to take profit on a fair value gap. So let's head down into the charts to show some chart examples. So right here on the daily time frame, we have this fair value gap here. This week and this week. And right here we have this right here. This, you have this and this. Market is likely to come down to fill that fair value gap. You have this and this. Market is likely to come down to fill it because like price don't like leaving inefficiencies. Like right here, we have this fair value gap, first candle, second candle, third candle, and we have the spaces between them is fair value gap. We got this candle retracing into the fair value gap. That was just support the price upward. And right here, you have first candle, second and third, the spaces between them. This candle retracing into the fair value gap supported the price upward. Like I said, it could act as confluence. It could act as confluence or entry opportunity. So in the lower time frame, I'm sure there will be a confirmation entry here. So let me head to lower time frame and show where fair value gap was used as confluence. So right here we still have this. Market came back right in and move up. Acts as dual liquidity. You could have taken an entry, selling the market and take profit on the fair value gap right here and use it to take price. See, after an expansion, price retrace to fair value gap to make a move up before just moving down. Right. Here on the 15 minutes time frame, I see that an imbalance supports continuation. So right here acted as support. After an expansion, price came back down to an imbalance. Tap it before continuing upward. And I told you it confirms an order block, breaker block, and a breaker block that has a fair value gap have higher chances of holding. Another block that have a fair value gap has higher chances of holding. So right here, this is another block, series of down candle. Then we got an impulsive move up, leaving a fair value gap. Came back, use it as support to continue the price upward. And another block that formed from a fair value gap have higher chances of holding. There's a fair value gap around there on the higher time frame. So right here, we have a fair value gap right here. And on the lower time frame, you saw the other block. If you don't know what another block is, I have a video coming up on other block. Sorry, right here. And we saw the other block on 15 minutes time frame supported the price upward. So fair value gap act as confirmation. It supports continuation, can be used as continuation after an expansion upward. Price retraces mostly to a fair value gap because price don't like keeping the market inefficient. And I said you would like to be you love to trade on a market that has volume, no matter what you trade, whether support or resistance. So that is that on fair value gap. Hope this video was able to help you. Consider liking and subscribing. So always remember, small step, big growth, endless reward. Code signing out.